Hi, everyone, and welcome to this week's episode of the Grain Gauntlet. As always, 5 questions from farmer clients and potential prospects. This is Patrick. Josh, you ready to go?
Yep.
All right. Starting up with a little bit of a bonus question. This is basically from me to you. Are you happy with the supply and demand report?
I was overjoyed with that. I couldn't have wrote a better supply and demand report. It's extremely bullish in such a way that we add lots of potential price movement with any kind of weather risk. Now it's said we get a 30 or 50 cent rally in corn and $1 in beans. We get twice that because ending stocks is so much closer to being very, very, very tight. We don't need to lose 100 million bushels to have a great big rally. We can rally on just weather concern now. So I was very happy.
All right, glad I asked. All right, first question here. Why did we see corn prices move lower if the report was so bullish?
Weather trumps everything. And right now we have a rapid planting pace for most. Don't tell that to some of my guys in the southern part of the Corn Belt. They will shoot you because they're not planting at a very rapid rate, okay? But the majority of the Corn Belt, rapid rate, and now it's going to be followed by cooler and wet weather. You can't ask for a better start for most of the Corn Belt. Weather trumps everything.
Yeah, trade is definitely focused on weather, and I'll add that I do think there's skepticism of the USDA projections with increased demand, and there's skepticism that these trade deals are going to even happen. There's still people out there talking this morning about how we could lose 20% of our soybean sales if we don't make a deal with China. People, I guess, need to see it to believe it, have a deal signed, but we don't have that skepticism.
I'm not an expert in that. You follow that a lot more, but come on, people. Really? China and the U.S. don't make a deal? The world's ended. It's got to happen.
And it should be apparent to more and more people now, China needs to make a deal, more even than us.
Well, they export about 450 billion, 3 times as much as in dollar amounts they export to us or we export to them.
Exactly.
Oh, we buy other junk. If we're not buying the junk, their factories close.
It's that simple, and that's already actually started to happen. So, yeah. All right, next question. Is the only thing that matters in a market anymore which way the funds are positioned?
Sure seems like that, right? Because the funds can drive things up and down. But if you look at the turning points in the marketplace, it's always commercials stepping in. I think at the top of the market, commercials were buying ahead, especially in the corn market, buying ahead because they knew all this stuff was coming down with the tariffs and everything else. And now they stopped. And that turned the funds from long to short. You're going to see the same thing when they see a really cheap price and say, hey, we're probably not going to see this. I think we're already there, by the way. We're not going to see this for a while again. We're going to start buying. They'll start buying and the commercial and the funds will liquidate.
Okay. Where and when do you think the wheat down move will end?
Yesterday.
Very good. Yeah, I've seen similar suggestions and analysis this morning. I've had a little bit of a reversal yesterday, and market's definitely starting to take more note of weather issues in China. I felt like a few weeks ago I was only talking about that. Now I see people talking about it every day. You got mosaic disease spreading around Kansas, so there are issues building up with wheat. But long term, still don't have a whole lot of optimism for wheat. But I am hopeful this is the bottom.
You're looking at technicals, and one of the things at the top and at the bottom of the market, you usually see like a spike low or spike high, and then the market same day comes back and goes reverse, right? It's called a key reversal. That moves more times than you could possibly imagine. That's what I saw yesterday. That's why I say yesterday. From a technical standpoint, the market pushed wheat prices to ridiculously low levels. They got the last of the small or weak sellers into the market and reversed on them yesterday. I think yesterday was a very critical point. That doesn't mean we rallied both straight up, people. What it means is that we probably don't go lower for a while. You got harvest coming up in KC week in July. It's going to be hard during harvest time to get the market really moving, but it's a feed grain and it will follow corn prices to some degree. We expect to rally in corn.
Okay, all right, hopeful sign. This question from Prospect. Is it a bad time to start with a new market advisor if I have most of my old crop sold and about half of the new crop priced?
Can't really answer that question because I do not know your particulars. If you sold all of the stuff that you have forward priced on new crop and you got a really good price for old crop, your market advisor is doing great. Whoever he is, stick with him. If, however, it's a poor price and you're not doing well with your marketing, switch, hold the market advisor accountable. We can help you at any phase, okay? Because what we'll do is we get to know you where you are with your sales and then go off of that with our recommendations.
Right, exactly. Regardless of the timing or where you're at, we can always pick up where things have left off and find a way to help you. Okay. All right, fun question also from Prospect. Are you guys still confident in at least one more rally by July to finish off old crop sales?
I'm going to add my own question to myself. Pat, are you dependent on a drought to get one more rally to get sales made? And the answer to that is no. If I ever was dependent on a drought to get a price rally, everyone should fire me because that's ridiculous. I am somewhat dependent on normal weather creating normal price premium being added, risk premium being added to the crop. There are very few years where we don't add risk premium during the summer. So I am dependent on us getting better prices because this is a ridiculously low level that's not profitable for farmers. I expect at least one, maybe two more rallies. How much? The weather will determine that. I do not expect a 2012 drought. It's a very low probability of getting something like that. I do, however, expect the same kind of weather premium being added like it was the last 9 out of 10 years during the summer months. And that's what we will price.
And that's really important. So this week's supply and demand work comes in because it giving those lower ending stock projections will make any weather issue that much more amplified and give us a bigger rally than we otherwise would have gotten without these new numbers.
Oh, the amplification. That's a great word because instead of rallying 50 cents, with the ending stocks where they are in old and new crop for both corn and beans coming down, now you get the same concern and you double that rally.
And one last note, I would be more concerned if we had been sold out already on old crop.
I am very glad we have some bushels left to sell. Without bushels left to sell right now, we would have had to sell for like tens of 20 or something like that in beans and 480, 490 in July corn. I think we can do better than that.
Okay, let's end on that note then. Thank you everyone for the questions. As always, if you have a question you want to hear answered on this show, submit your question to adminstaff@hedge-plus.com. That's all for this week. Have a great week, everyone.
Guys down south, send us some rain. We need it here in Wisconsin. Thank you.
Thanks.